Welcome to the deep dive. You know, as we navigate life, maybe seeing our parents get older or just kind of looking ahead to our own later years, there's often this quiet question, isn't there? How do we make sure we have a secure, dignified future, especially if, our health needs suddenly change?
Hmm.
It's a pretty universal concern, I think. And today, we're taking a deep dive into something that's becoming more and more vital for Canadians: long-term care insurance.
It really is.
Our vision today is to sift through all the sources you've gathered, pull out those key pieces of information, and really arm you with the insights you need to make some confident decisions. Okay, so let's unpack this a bit. Did you know that by 2030, nearly 1 in 4 Canadians will be 65 or older?
Yeah, that's a huge number.
It's a massive demographic wave, right?
Yeah.
And it's heading straight for our healthcare system and, well, our personal finances too.
And the striking reality here is that even with this huge jump in demand for care services, most Canadians are just, well, caught off guard financially. Yeah, there's this persistent idea, this misconception that government programs will just fully cover long-term care. And honestly, that creates a sort of hidden financial landmine for people and their families. It often leads to pretty substantial out-of-pocket costs.
Mhm.
In fact, a recent survey by the Canadian Life and Health Insurance Association, the CLHIA, found that, get this, three-quarters of Canadians admit they have no financial plan whatsoever for long-term care if they were to need it.
Wow. Three-quarters. That's pretty sobering, isn't it?
It is.
Like three-quarters of us are basically just crossing our fingers and hoping for the best. So, okay, beyond that aging population stat, what really makes planning for long-term care so critical, like right now? What are people maybe misunderstanding about our provincial health care coverage?
Well, it really boils down to this fundamental gap,
Oh,
between what people expect and what the reality is. While our provincial healthcare plans are certainly robust in many ways, they absolutely do not cover everything when it comes to long-term care needs. A lot of Canadians mistakenly believe that if they need, say, full-time care in a nursing facility, it'll just be fully paid for.
right. That seems to be the common assumption.
Exactly. But the truth is, government programs might only cover a small portion or maybe even nothing at all, depending on the specific situation and, importantly, your income level. And this leaves individuals, and often their families, on the hook for a really significant chunk of what can be truly staggering costs.
And when you say staggering, what kind of numbers are we actually talking about here? Can you give us a sense of the scale?
Okay, well, think about this. The average cost for just a private room in a nursing home, it could easily range from, say, $2,000 to maybe $3,500 per month.
Per month. Wow.
Yeah. And if you're looking at a private home that offers more intensive care, some sources suggest that can climb as high as $15,000 a month.
15,000.
It's possible, yes. And for in-home care, which, let's face it, many people prefer, you could be looking at anywhere from maybe $25 to $40 an hour, potentially even up to $90 an hour in some provinces, depending on the type of care needed.
Okay, so without a plan, those costs could just decimate retirement savings.
Absolutely decimate them. And too often, that financial burden falls squarely on the shoulders of adult children or other family members.
Yeah, that burden on families is a stark reality. When I think about long-term care, my mind immediately goes to the elderly. But is that maybe a common misconception? Is this something people of all ages should be kind of thinking about?
That's an excellent question, and yes, it's a very, very common misconception. While we naturally associate it with aging, long-term care isn't exclusively for seniors.
Okay.
People of all ages can unfortunately experience conditions or accidents that require long-term care. A sudden debilitating illness, a severe injury, maybe the onset of a chronic condition that could require round-the-clock support for someone much younger, perhaps in their 30s or 40s even. It's really about needing help with daily living, regardless of how old you are.
Right. So, okay, if you find yourself in that situation, needing that help, what exactly does long-term care insurance cover? What's the practical benefit it gives you?
So long-term care insurance, it's specifically designed to provide financial support when you can no longer perform basic daily activities on your own. That might be due to a chronic illness, a physical disability, or maybe a cognitive impairment like dementia.
Okay.
Most policies trigger benefits when you can't perform at least 2 of 6 specific activities of daily living, or ADLs. Those are things like bathing, dressing, using the toilet, eating, transferring, like getting in and out of bed, or maintaining continence without substantial help.
2 out of those 6.
Right.
Yeah.
And the coverage is quite broad generally. It can include things like professional nursing care, rehabilitation, different therapies, and just help with personal care tasks. It typically covers services whether they're delivered right in your own home or maybe in an adult daycare program, an assisted living facility, or a traditional nursing home.
That's pretty comprehensive then.
It can be. And a really critical detail here, these benefits are typically paid out non-taxable in Canada.
Oh, the tax-free benefit, that's certainly a powerful incentive.
Yeah.
But of course, the big question everyone always has is, what does this protection itself cost? What can someone expect to actually pay in premiums for LTCI? And, what factors really drive those numbers up or down?
Right, the cost question. Well, the premiums can vary quite significantly. Just to give you a rough range, monthly premiums for someone entering their retirement years, let's say age 60 to 70, might span from maybe $62 up to $160, depending on the insurer and the specifics of the plan they choose.
Okay, $62 to $160 around retirement age.
Yeah. However, if you start earlier, say in your mid-40s, you could be looking at a much more affordable $50 to $90 monthly range.
Ah, so quite a bit lower.
Quite a bit. But then for someone 65 or older applying, those costs can easily jump to $200 per month or even higher. The basic rule is the younger you are when you apply, generally the lower your premiums will be each month, although obviously you'll be paying for a longer period of time.
Right. So it's kind of that paradox, isn't it? The best time to get it is when you feel like you need it the least, maybe in your 40s or 50s, to lock in those savings for something you hope you never actually use.
That's precisely it. Yeah.
What else impacts the cost besides age?
Well, other key factors definitely include your health status when you apply. Better health usually means lower premiums.
Makes sense.
Your gender also plays a role. Women tend to pay slightly more, mostly due to longer average lifespans.
Right.
And then, of course, the level of coverage you choose, meaning the daily or monthly benefit amount you want and the length of waiting period before benefits actually start paying out. All of those things contribute to the final price tag.
That's a very clear breakdown. Thanks. Now, I've also seen quite a bit of discussion lately about a shift in how these policies are structured. What are the different types of plans generally available to Canadians right now, and what seems to be becoming more popular?
Yeah, that's a good point. Traditionally, you'd find what are called standalone long-term care insurance policies. These typically pay out a weekly or a monthly benefit. It might be on a reimbursement basis, meaning you get paid back for eligible expenses up to a certain limit. Or it could be an income-style benefit, where you just receive a preset monthly amount that you can use however you see fit for your care.
It's okay. Reimbursement versus income style.
Exactly. However, if we, connect this to the bigger picture, there's definitely a growing trend now towards hybrid policies.
Hybrid. How do those work?
These combine life insurance with long-term care benefits, and they've really become increasingly popular, especially as the premiums for those standalone LTCI policies have generally gone up.
Yeah. Okay, so it's like a two-in-one deal.
Sort of, yeah. You might also find long-term care riders that can be attached to existing whole life or universal life insurance policies. That allows you to access a portion of your death benefit early while you're still living, specifically to fund your care needs.
Okay.
And even some critical illness plans are now starting to offer support for certain chronic conditions that could eventually lead to long-term care needs. So the market's definitely evolving.
That is a fascinating evolution.
Yeah.
And speaking of the market, what are some of the maybe emerging issues or challenges in the long-term care insurance market as we look towards, say, 2025? It sounds like there's quite a bit of change happening right now, maybe even influenced by the pandemic experience.
Absolutely. The market is very dynamic at the moment. One of the most pressing issues continues to be the rise in premiums and just general affordability concerns. That's largely driven by increasing demand for care and also insurers experiencing higher than expected claims payouts. It really just highlights why it's so important for policyholders to, review their terms regularly and maybe shop around occasionally.
Good advice.
We're also seeing more discussion around potential regulatory changes at the provincial level. Some provinces are looking into or even starting to implement maybe state-run programs or potentially tax incentives for buying LTCI. Some are drawing parallels to models like the one in Washington state in the U.S.
Okay. Provincial variations could get complicated.
They could. Another challenge is simply access to care itself, and the fact that many traditional policies maybe haven't fully adapted yet to the growing preference people have for aging in place, staying in their own homes.
So the policy might not cover enough for in-home care.
It might not adequately cover all the costs associated with robust in-home care, yeah. That's definitely an area to watch.
And I imagine technology must be playing a pretty significant role here too, maybe both as a solution and perhaps a challenge for insurers.
It certainly is. The impact of tech advances is, well, profound. Think about things like telehealth, remote patient monitoring, even, robotic assistance in some cases. These innovations are really transforming how care can be delivered.
Yeah.
And they have the potential to both improve the quality of care and maybe even reduce cost in the long run. However, insurers have generally been a bit slow, perhaps, to adapt their policies to fully accommodate or cover these newer forms of care.
Right, so there could be gaps.
There could be potential gaps in coverage if you're relying heavily on those kinds of technologies. And lastly, there's a persistent issue with claims processing and sometimes denials.
Ah, the fine print.
Well, yeah, and as more baby boomers start to actually file claims on these policies they bought years ago, insurers are, shall we say, tightening their criteria, and that can unfortunately lead to disputes and delays sometimes.
That sounds stressful when you're needing care.
It really does.
Sure.
It means policyholders need to be super vigilant. You need to understand exactly how to file a claim correctly and also know your right to appeal if a claim is denied.
That sounds like, well, a lot to keep in mind, especially when you layer on the fact that apparently a big majority of Canadians, something like 4 in 5, have said the pandemic fundamentally changed how they view the whole long-term care industry.
That's true.
They believe significant change or even a total overhaul is needed. Plus, something like a staggering 90% of people surveyed said they'd choose at-home care if they could.
Yeah, the preference is overwhelming.
Only 13% have actually planned for it financially.
Yeah.
That just screams, chasm between what we want and how prepared we are, doesn't it?
It truly does. You've got this really strong public desire for big changes, for more investment in home care across Canada, and a majority even say they'd be willing to pay more in taxes to support it.
Right.
Yet the striking reality is that very few Canadians actually expect that change to happen quickly.
The cynicism kicks in.
Maybe realism. But it makes that personal financial planning for long-term care even more critical, For your own peace of mind and your future independence. You can't necessarily just wait for the system-wide shifts to happen. You need a plan B.
Yeah, you need your own plan. So, okay, after peeling back all these layers on long-term care in Canada, I mean, from the sobering cost to the complex world of insurance policies, what's the ultimate takeaway for your future, for the listener?
Well, if we kind of connect all the dots, long-term care insurance, it really stands out as I'd say, a crucial piece of doing comprehensive retirement planning.
Okay.
Fundamentally, it's designed to protect your hard-earned savings from just being wiped out by potentially massive care costs. And critically, it gives you the flexibility, the options to choose the kind of care that actually suits your preferences, whether that is staying in your own home or picking a specific facility you like.
And remember that power of acting early, right? We talked about how premiums jump significantly with age, so applying when you're in your 40s to early 60s, that can make a huge difference in affordability over the long haul.
Absolutely huge.
And it's also just vital, isn't it, to compare multiple quotes, really understand the details, like the daily benefit amounts, the benefit periods, how long it pays out for, and always look for critical features like inflation protection. You want that coverage to keep pace with rising costs down the road.
Couldn't agree more. And this does raise an important sort of concluding question. We see this strong public desire for change, for more investment in home care, people willing to pay more taxes for it.
Yeah.
But as we said, few actually expect that change to happen fast. And that reality, that gap, just makes taking personal financial responsibility for your potential long-term care needs even more paramount. It's about ensuring your own peace of mind and maintaining your independence down the line.
Ultimately, planning for long-term care, it's really about preserving your dignity, isn't it? And maintaining control over your future as much as possible. It's about proactively tackling a pretty significant financial unknown before it potentially becomes an overwhelming reality for you or your family.
Well said.
So maybe consider this. How do you actually envision your independent and comfortable later years? And, more importantly, what concrete steps will you take, maybe starting today, to make that vision a reality? For yourself and, for your family too. We really hope this deep dive has equipped you with some valuable insights. Remember, though, the journey to being truly well-informed, it's always ongoing. And talking this through with a qualified, independent financial advisor can really help tailor all these insights to your own unique situation.